morning, folks. This is your markets for Wednesday, February 7th, 2018. And we're going to get right into it. We're going to start the charts right here. Now, here's the thing. First thing we're going to get into is these bonds, because this is what's been causing the trouble all along. And I do not like the look of this. I do not like the look of this. These bonds are recovering. The bond prices, the yields are rising too fast again. Yesterday, I was forecasting a market recovery, and the market recovery is underway today, this morning. Right now, as we speak, the market recovery is underway. But look at this U.S. 10-year. Look how it's bouncing back. This does not look good for the recovery of the stock market. You see how this is rising up here? If we go to the 1 day, just a sec, 1 day right here. Well, okay. Takes it to the 5 day. You see this bounce back right here. We got to really watch this right here, right in here on this bounce back. If this bounces back too hard and gets back up to this pressure up here, see this pressure up here? This is what caused our crash. Now, we got to watch this right here. See how it's been knocked down and it's staying down fairly low. As long as it stays down fairly low, the recovery looks like it could happen, you know. But if this starts to bounce back up here or goes higher, this is the danger zone, because this is what caused the crash. You have to focus. You have to be myopic at what caused the crash to happen in the first place. This is it right here. This is massive amounts of debt. Massive amounts of debt in the system. $20 trillion of debt. $100 trillion in unfunded liabilities. New infrastructure programs that Trump wants. New tax cuts. Blah, blah, blah. Goes on and on and on. This massive amounts of debt and credit creation is what's causing these bond prices to go upwards. And it's going to continue to push them. Now, the Fed is trying to sell their toxic balance book. Along with this, at the same time, they're going to increase it. They've increased it 10 billion, now 20 billion, and this is what's causing this. This is this pushing action. And so if we see this start to rise up right here, right? This right here, this is the trigger that could actually start another fall with the stock market. And so this recovery is totally reliant upon these numbers here staying low, this staying down. As long as this stays down, this recovery will continue. The stock market wants to recover. It wants to recover from all this. And so does Bitcoin, right? But Bitcoin now is tied into the stock market. The whole thing's tied in together. When this stock market goes down again, now believe me, it will. It's going to go down again. When this gets too high, when this U.S. 10-year gets too high, and I believe that the real trouble's going to come again when this broaches 3% on the U.S. 10-year. So you can kind of figure it's at 2.78 right now. We're going to have this recovery until this thing, I believe when it broaches 3% on the U.S. 10-year, this is when we're in for one heck of a crash. So don't get too cocky with your buying stocks, you know, and you're buying cryptocurrency. Don't get too cocky, because if you get too cocky out there and you start buying too much of this stuff, you could get burnt big time. Because right now, if these numbers go too high, you know what they say, what goes too high, it's like Icarus, you know. Icarus, he had these wings made out of wax, and he flew too high to the sun, and his wings melted, and down he come. So you got to be careful now with these things like cryptocurrency and the stock market, because they're all tied into this, and if this goes too high, look out. It's like Icarus. It's going to come down. So that's what I got to say about that for now. Let's take a look at the silver price. Oh, isn't this pitiful? Isn't this pitiful? Look at what they've done. Look at what the banks have done to the silver price. They can't take it any lower. Or maybe they can take it a little bit lower, but not much. I mean, they're going to destroy the mining. They're going to destroy the mines if they continue down too much lower. Another $2 more, and the mines are not going to have any profit at all. And they'll just say, okay, boys, don't even start the machine up this morning. It's not worth our while. That's what they'll do for silver. Or the mines might actually take a reverse tactic. They might actually say to themselves, well, we're just going to take these silver bars that we just smelted and put them in the back room in the vault and keep them. And can you imagine what if the mines all started to get that idea into their head and keep them for a few months until the price goes up? First off, the mines, you know, they would make a lot more money if they did that. They could really fix the bankers. I'm telling you, honest to goodness, if the miners were to get together, they could really do a job on these bankers who are manipulating the price. The miners could show them a thing or two where the silver really comes from. The real silver comes from the ground. It doesn't come from a slip of paper. These bankers, you know, they've had their way for a long time, but something's going to break on them. This trick that they've been pulling all this time and they've been knocking this thing down, it's going to break. And listen, if you buy in physical silver, don't give up, because this is going to be the biggest thing of all when it finally breaks free. So now let's move on to the Dow Jones Industrial Average and see what we got here this morning. Now, it was up a few minutes ago. It was up like 100 points, and now it's back down again. It looks like, what are we looking at right now? It's up 10 points. So it was up 100, now it's up 10. It's just bouncing around, but the trend line, it looks like the trend line is up. I think, let's see, 1 day. Is this the 1 day? Yeah, the trend line looks to be up over the period of the day, you know, but it could have its times today where it might dip into the red and might dip back up again, but I think it's going to close on the plus side, I think, today. I'm not sure about that, but I think we're in a slow rally period in the stock market where we're going to be rallying back, and cryptocurrency. But this is so tentative, like I say, this rally. Why it's tentative is because of the bonds. So now as we move on to the, okay, one more look at the stock market again. It says it's up 10 right now, 10 points, at 24,923. I think that this stock market is, if it does rally, it's going to be so tentative. It all depends on the bond rate. And so now let's take a look at our Sweet Light crude. Sweet Light crude is $63.50. And so the crude price is not that high. It can go as high as 70 before it starts to get capped off by the wells in West Texas, you know, because they're the big producers right now that are keeping the price down, because the world has a set supply of oil it uses every day. And if you go over that, the price drops. And if you go under that set supply of oil, then the price goes up. And so what happens is that there's a set amount of oil they use every day. I didn't know what that number was. I think it's like 30 million barrels a day they use. And they have to have that exact amount every single day for their consumption. It's almost like if you had a fat guy, you know, and he had 4 slices of French bread every morning for breakfast. No more, no less. And he needs his 4 slices. If he has 3 slices, he goes hungry. And if he has 5 slices, it's too much. He has to have his 4 slices every day, every single day. And that's what the world oil market is like. And so the biggest swing supplier right now is West Texas. They are what makes up that swing. So if West Texas produces a little bit more, we got a surplus. If West Texas doesn't produce enough, then we got a deficit. It all hinges on West Texas at this point, because OPEC is pretty much regular in their supply, you know, and they don't go up or down. They're the ones who are regulating this supply of oil. Is OPEC. If it was OPEC, if it was just OPEC in West Texas, we didn't have that swing supplier West Texas, OPEC could drive the price to the moon. The oil price would be like $300 a barrel right now if it was just for a monopoly with OPEC having the control. But West Texas is what keeps the price down to $63. You know, so if you go to the pump right now and you're getting fairly cheap gasoline prices, it's because of West Texas. Thank you, West Texas. You know? Cryptocurrency, what we're looking at right here. We're going to take a look at the cryptocurrencies now. Everything's gone back into the green again. Litecoin, 149 bucks. These are the ones I like. Ethereum I like, 818. Bitcoin I like, but not as much. I hate Ripple, but Ripple's up 77 cents. Bitcoin Cash is a nice coin. It's $1,000, you know. Neo's a nice coin, 111. Anyway, those are the cryptocurrency market capitalizations. It went up again, $385 billion market capitalization. It was down like 330 or something like that for a while there. It was when it was at its bottom. Now, take a look at Bitcoin. We'll go to Bitstamp here. That's the one I always follow. And what we're looking at is a little rally, but it's in the early phases of the rally. It's rallied up to $8,254 this morning from a low of 59.20 that was set, you know. And so that's what cryptocurrency's doing. Now the dollar is at 89.88, staying fairly strong. U.S. 10-year Treasury bond. This is the one we really need to keep our eye on over the next few days, because the rally in the stock market, the rally in cryptocurrency, everything, let's focus myopically on what this is. This is the 5-day chart of the U.S. 10-year Treasury bond. And if we go right in close right here, we're going to see what all these rallies are dependent upon. Right in here. This is what all these rallies are dependent upon, is from here to here. Now, here's the crash. Let me go back a little bit further. There's the crash, and that's what the crash did. It sent these prices down. These Treasury bond yields fell, and we got to watch this. If this goes up too fast, right, then everything, the rallies will be in jeopardy. The rallies will be destroyed. You won't have your rally in cryptocurrency anymore. You won't have your rally in the stock market anymore if this goes up too fast. Now, if this stays down, the rally will continue as long as it stays down. This is what it all hinges on right here. We got to watch this myopically, just like I'm doing right now. If you want to go there, it's the U.S. 10-year, and go to the 5-day chart. And keep your eye on that, because that's going to tell you. That's what I'm using, because this is what caused it. If you go back here a little bit, you see, when it was up here, that's what caused it. It only went along up there for a couple days before it caused the crash. If it goes back up there again, look out. Or if it goes up higher, and this time it could go up higher, because they've had their little tantrum in the markets. And this time it could go up higher before it trips the switch. If it does that, then we're going to get a bigger crash next time. And I think that's what's going to happen. That's what my prediction is. So you got to keep your eye on this myopically. Keep your eye on where this is going. This is your key to understanding. And see, she's turned up just in the past few minutes. She's just that little titter right on the end. She's going up again. Got to watch it. Watch it don't get too high, because it could bring all of this down, this rally and stuff, and you want to get out before it comes down if you went back in. I'm telling you, this is dangerous. You could lose all your money on the stock market and in cryptocurrency right now, because if this goes up too high, too fast, it could all come crashing down around your head, whatever rally we got. So, listen, thank you guys for listening. Like and subscribe, and we will catch you in the next episode. Bye-bye.